Welcome to the Daily Insights That Matter. Now, the Centre's FAME2 scheme, or the Faster Adoption and Manufacturing of Hybrid and Electric Vehicles scheme, aimed at promoting the adoption of electric vehicles in India, is facing a significant shortfall in meeting its targets. Now, with the deadline fast approaching, the scheme has achieved only 41% of its intended objectives. Let's discuss this today. Now, the FAME scheme was introduced in March 2019 and would likely end by March 2024 as the government plans no further extension of the scheme. So far, the government has sponsored only 41% of the target of 1.5 million EVs as part of the scheme. Now, the breakup shows that the least subsidy allocation was provided to the electric four-wheelers and the electric three-wheeler space. While e-buses have achieved 33% of their target, electric two-wheelers have achieved the highest incentivization of 56%. Now, the total fund allocation for the scheme is 8,596 crores, out of which roughly 50% has been utilized to the tune of 4,295 crores. Now, with only 10 months left, the government is confident of achieving the target in the two-wheeler electric space and the e-buses segment by the end of the financial year, as there is a huge demand in these segments, while that of the electric four-wheelers and the electric three-wheelers is unlikely to be met as only commercial vehicles get the FAME support. Additionally, electric two-wheeler sales in India crossed the 1 million mark for the first time in FY23, but however, the incentives were not distributed as some of the manufacturers were found violating the FAME guidelines. Now, with EV penetration increasing in the country, the end of the FAME scheme by FY24 will make the EV industry more independent by gradually phasing out the subsidies. Now, according to data released by the Ministry of Statistics and Program Implementation on Monday, India's urban unemployment rate reached a historic low of 6.8% in the Jan to March quarter of 2023, down from 7.2% in the previous quarter. Now, the urban unemployment rate was also the lowest in FY 2023 since FY19 for all the quarters, according to the PLFS data. Now, a person is considered unemployed if they worked for at least 1 hour on any day during the 7 days preceding the day that the survey was concluded. Now, this data marks the 7th consecutive quarter of decline and indicates a positive trend in the urban labor market's recovery from the impact of the COVID-19 pandemic. Now, the latest data from the periodic labor force survey reveals encouraging signs of economic revival, with the lowest quarterly unemployment rate recorded since the inception of this survey. Now, as India prepares for upcoming state elections, job creation remains a critical issue on the agenda. Although overall unemployment rates are decreasing, there is still a gap between the unemployment rates of men and women. The unemployment rate for men is at 6%, while for women, it's at 9.2%. In the previous quarter, the rates were slightly higher at 6.5% for men and 9.6% for women. Now, it's important to address this gender gap to make the job market more inclusive. Now, the percentage of people participating in the urban labor force has slightly increased. In the last quarter, it reached 38.1% for all the age groups and 48.5% for people above 15 years old. Now, this means more people are willing to work or look for employment, possibly because they see better job opportunities. However, it's worth noting that other indicators such as the Employees Provident Fund Organization payroll data shows a decline in the formal sector employment in the recent months. So, while the periodic labor force survey data is positive, there are other factors to consider. The All India unemployment rate measured by the Centre for Monitoring Indian Economy, or CMIE, rose in April, indicating more people joining the workforce. As the economy changes, policymakers and analysts will closely watch these different indicators to understand how India's job market is recovering. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com